So for
Okay.
this is okay. This is clear. No problem. Then
So,
the debt management, doctor. I
okay.
got confused because my company, for example, is not taking any debt. They use return profit to manage their investment.
And you know why? And you know why? What? Because sometimes the ratio analysis, the ratio is given in the financial statement.
Yes, correct. Sometimes
Eh?
you will find them, yes, in the
Because
beginning.
so it is. So in my understanding that this ratio is already there. It's already there. And what you have to do is that you have to make use of it and try to answer all these questions.
So these answers,
Don't give me one line answer.
We will bring the answer from the cash flow, but we will justify it using the ratio.
Yes. Meaning that you have to use all the financial statement to answer this part. How you calculate ROE? Tell me how you calculate ROE.
It is return
By
on
looking
equity, so we'll divide the income, the net income over the
yes.
equity.
Which statement are you looking at?
For the return, we will look on the income statement. For the equity, we'll look at the balance sheet.
This is all financial statement.
Correct.
So we are talking about financial statement here, right? So regardless of they put it as a cash flow statement and whatsoever, so this is actually a financial statement. We're looking at the financial statement. Only a different component. Okay.
Yes.
All right.
Doctor, sorry, Satish. Just one question, doctor.
Yes, Sharon. Satish?
Satish. So on the debt management, right, can I consider as a non-current liability and current liability as a part of the debt for the organization? Because if I just take one line of a debt to fulfill for 4 pages, doctor, I'm literally struggling to do for 4 pages. So I'm just wondering if I can take that as a part of the debt.
Yeah, okay. So debt management, debt management, we are looking at debt management of the company. Okay, so how are you going to answer the question? How are you going to answer this question? Is actually by looking at the debt ratio here. The debt ratio here. Wait, I have to answer this one.
Okay.
Sorry. Okay, sorry. All right. So you have to look at the debt ratio, and you have to look into the company debt management. Meaning that when we are talking about debt management, right? When we are talking about debt management, debt ratio is only one part of it.
Yeah.
4 pages, right? I asked you to write 4 pages, 15 marks here. Okay.
Yeah.
So what are the component they are looking in the debt management? So you have to look whether they have the bond, how much is the interest earned. Okay, so all these kind of things analysis that you have to do. That's why it is 4 pages.
I just for my example, the company I selected, I found out that they don't take loan. They don't have liabilities based on long term or short term. They only
so how they
invest
manage?
they only
How they manage
invest,
it?
they just use their equity back. Every year they put some percent of the return earnings into their business to finance their activities.
Okay, right on that.
So I can talk about that one.
Yeah, you talk about that. Okay, because it is quite I think you have to revisit again the company because maybe they have bank loans or other type of loans. You have to check. So that's why you have to look into the company financial statement. You have to look the financial year-end report. You have to look into that in order for you to find all this information. Okay, so I don't think that the company has no debt. They still have a debt. What happened to the current liability? They should have the current liability. So when you are talking about current liability, now you are talking about spontaneous financing. Or maybe they have this temporary financing. So that could be some of the debt which actually the company is managing. So that's why you have to look into the company financial statement, annual report. Okay, so look into this area.
Right, doctor. Thank you.
Yes. Okay. Right. Okay. Any more question on FEP? I know you've been struggling for this FEP.
Yeah, it's scary
Yes,
actually.
yes,
This 10 pages, for example, for financial statement.
All right. Okay. So
Oh,
shall we
one
One more
continue?
question, Doctor. Just to reconfirm, the ratios are only for the 5 years, right?
Yes, for the 5 years. You are
And
actually
one more,
you already deal with me for that 5 years, right?
yeah.
Okay.
And the other question is, you say the slide presentation. Do we pitch the presentation or just submit the presentation?
Okay. Actually, what I want you to do is that just do the slide presentation will do.
So just
Just
submit
do
the
the slide
PPT,
presentation.
just
Exactly.
PowerPoint. Thank you.
Yes, PowerPoint. Okay, just
Thank
do
you.
that. So no more question. If you ask again, and then I will say that okay, record your voice. Then you ask again, then I say okay, record your video. Okay, so I want you to just do your slide presentation. Just do the slide presentation. Enough. Okay,
What
done.
about the last question, Doctor?
Huh?
Ibrahim, go ahead, Ibrahim, please.
I just want to ask Doctor about the last the next question. Are we now in a position to answer this question or not yet?
Which one?
V.
Which
Forecasting.
question? Huh?
The forecasting project question.
30
Well,
marks.
Project future
the
performance.
projection. Yes.
Pro forma, this one.
Yes.
So you have learned how to do pro forma financial statement, right?
Yes, this question.
Yes, do that lah.
Oh. we use the CAPSIM only for the performa financial statement. When we
Yes,
get
you do the pro forma financial statement for 10 years. So what you do is that you have to have the assumption. You have to have the assumption and you deal with assumption. So how you're going to do the assumption is actually looking at the past 5 years of the financial statement. Look at the trend. What is the trend of the revenue? Trend of the revenue. And then you see what is the trend of your revenue, then you do your financial statement, right? And then what is the trend of the total asset? That total asset will be representing on your balance sheet, right? And then you try to find to do all this kind of analysis. So based on the market, so this is actually okay. Are you talking about this one?
Yes, Doctor.
Okay, so you look into the market information. So look at the share prices of the stock. That's why I said that. Also perform the company stock evaluation and calculate intrinsic value.
Company stock forecasting. This what we will take this
Yes.
this session, inshallah.
Okay, so what do I want to say just now? Okay, so this is what we are looking in intrinsic value. Okay, so find what is the stock market of the company. Okay, and then try to perform some analysis on the stock evaluation. You know what how to do. First, you have to find the G, and then you have to know what is the expected return. Expected return of the company of the stock. And then you do the what do you call it as the some analysis lah. You compare the prices. So dividend, last dividend. So what are the last dividend of the company? The last dividend of the company, and then when you know the last dividend of the company, then you know the growth, and then with some expected return. Okay, then you will able to find the intrinsic value. Okay, so we have not yet to this stock evaluation, right?
Yes.
Yes.
Yeah. Okay. So what we are going to learn it today.
I think even this performa forecasting, we didn't go through it in this class. We just did last year trend analysis. like vertical analysis, horizontal analysis, and do some write-up about the the existing trend, not a future trend.
Yeah, for the future.
Doctor, if the statement that 10 years forecast is not each year for the things every year, right? Just one forecast for the 10 years, right?
No, 10-year forecast, meaning that
Every year.
2022, yeah, every year, 22 until 22, 23,
21,
4, 5,
20.
6, 7, 8, 9, 10,
10, 10, 10.
Okay,
22, is it?
21.
21.
2030.
Yes.
Right? Yeah.
Mm.
2030.
Okay. So what you have to do is that you have to find the trend and look at the trend, and then you justify. You try to what you call that as you make some assumption. So what I want to see is that I want to see just your assumption, and then with that assumption, then you can forecast for the next 10 years punya pro forma, the 10 years pro forma financial statement. Okay, from there you can see whether this company is going to perform or not in future. Okay, so you can see whether this company will be able to manage their cash flow, and what are the net income, the profit of the company, right? So this is actually what we are looking at. We are looking at on what are the trend or what are the future direction of the company. Future direction of the company.
The problem in the trend, doctor, that we are not in a normal situation. Since start of 2019, we have abnormal situation due to Corona. So the attitude, the financial attitude for the companies from 2016 up to 29, the start of 2019 is normal. But starting from 2019 as of today, this is abnormal situation due to this pandemic situation. So
Ibrahim, you are actually answering your question. You are actually answering your question, because now this is your justification. What is going to happen next? What is going to happen next? So you have to justify. Okay, for instance, you said that the company is not the revenue for the company will expected to decline 10%. Are you going to say every year? Are you going to say in which year? Okay, for instance, you are saying that it will decline for first 2 years, but it will increase in the next 8 years. So this is your justification. This is what I want you. I want to see from you guys. Meaning you justify. You justify about the direction of the company. You actually already answering your question now. Just now. Go ahead.
Okay. Thank you, doctor. Thank you.
So this is the justification that you have to do. Because this is pandemic, okay? With this current scenario of the pandemic, you say that okay, the revenue will decline. Okay, so when you want to do your financial your income statement, what you do is that you have to focus on your revenue. Then only, you can do your income statement. Right. So, and next one is actually you focus on your balance sheet. So how you do that? How to focus on the balance sheet is actually by looking at the total asset. So what is your justification on the total asset? Are you going to invest in total asset? So if your production is increased, then you're going to invest in total asset. So if you want to invest in total asset, remember I told you when you want to invest in asset, so you have to have a financial aids. Financial, what do you call it, as a financial source of financing. Source of financing activity is actually to finance your project, right? So if you want to buy the asset, right? So where you get the money from? Are you going to borrow? Are you going to issue a bond? Are you going to issue your equity? So this is justification. So that's what I want to see. I want to see how is your justification. because this is not about undergraduate. So most of the students said that we are not undergraduate students. Yes, you are not undergraduate students. So don't please provide us with all this kind of quality justification. So this is a way one step ahead of what you have learned during your undergraduate. So if it is just one line, so don't expect I will give you a full mark. So if you answer with the financial ratio, and then you support with all the information for the company, then I know that you are actually understand what is finance is all about. Okay, any question? Any question more on the FEP? I know.
We have the
You have to
term
score
in
this.
class, doctor.
Pardon?
Do we have a term in class
Of-
for the challenge?
Yes, you have to go for 13 in. All right. So remember in my earlier, where is that? Okay. In my earlier slide. So what? Okay. So you have to get a 13 in report. Okay. So what you do is that you go to the library and ask them about the 13 in. 13 in, and then they will give you a password, and you can go into the 13 in and send your report in. So what I want you to submit is only the report. Submit the report, the result.
We have already, doctor, our username and password from last classes. But normally they will give us like a class ID that we will enroll in, so we can submit the report on that.
No,
So
I don't have that.
do we have a class?
So I don't have that. I don't have 13 in account.
So are we
you may
expecting
use.
that
Pardon?
should we expect that you will provide us later the class, or
Oh, I don't have any. Okay, if you want me to provide you with the link, I can provide you with the link. It's okay. I can provide you with the link. I will send it to the WhatsApp group. But I don't have an account, because normally what I will ask them to do is that contact the library, and you can use the library 13 account. Okay.
okay?
All right. Okay. So any more question on this?
Thank you, doctor.
We should start our class by now.
Yes. Thank you very much for your explanation.
All
and
right.
support.
Okay. So I think that's it for the FEEP. If you have any question, please ask. Please ask. Okay. Right. So we are not going to do this. We are not going to do this. Okay, this is later. Okay, so we'll do on the stock valuation. Okay, so this is one of your FEEP question. Okay, so do the stock valuation. All right. So when we are talking about stock valuation, so we have to understand the characteristic of the stocks. Okay, stocks. So we have equity, right? So this is equity. Equity, we have two types of equity. So the first one is we have a common stock. Okay, second one is a preferred stock. So what are the characteristics of this? Okay, so the characteristic of common stock, common stock are the owner of the firms. So elect the firm board of director who appoint the firm top management team. All right, and let's look at the characteristic. Okay, the characteristic of common stock that they have no maturity. Okay, so can you guys give me what is the characteristic for bond?
It has interest rate.
Okay,
Yes.
interest rate, or
Yeah,
you call
has
it
a
as a
maturity.
coupon rate. So coupon payment, All right.
Yes.
So what else?
Maturity date, where the class you'll
Maturity
get
date. Okay.
full amount.
Maturity. So what else? What you pay upon maturity?
The principal, the
Par value.
Yeah, or
Par value.
principal, principal
value.
value.
Face value.
Okay, so this is either 1,000 or 100. Okay, so meaning that this one you have n. Okay, and the calculation is actually you are calculating the YTM. YTM is actually the discount rate and the discount rate of the bond. Okay, so in common stock, common stock, right? So you don't have coupon payment. You don't have coupon payment, but what you have a dividend. Okay. So what is the characteristic of the coupon payment? It's fixed, correct? It's fixed because it based on the interest rate, and how to calculate coupon rate is actually by calculating it by using the par
Coupon
value.
ratio multiplied par value.
All right. Okay. So this is the coupon payment, correct? So for dividend, there is no fixed dividend. And so meaning that it's straight from 0 to whatever interest lah. Okay. So infinity lah, right? So meaning that depending on what is your company net income. Okay. And second one is that, do they have a maturity? Maturity. So they don't have a maturity. So n will be infinity. We don't know when is the maturity. No maturity. In fact, there is no maturity. As long as there is, the company is still running. So meaning that your stock is still valid. Okay. So how to do the calculation? So do they have a par value? They don't have a par value lah. They don't have a par value on maturity.
Yes.
But they do have a par value. They do have a par value or face value, right? So this will be stated. This will be stated. Okay, this will be stated. All right. Okay, so what is the YTM? This YTM is actually the what do you call it, is the rate of return. Rate of return for bond. So this one, for this common stock, right? For this common stock, we normally put a common stock. Our common stock. So we have another one more characteristic, one more equity. Equity where it is a preferred stock. So we will look this preferred stock later, because this will have a combination between bond and common stock. Okay, so let's move on with some with how we're gonna do the calculation. Okay, so now when we are talking about bond, the claim is a coupon payment. So this is fixed, right? But for claim of common stock, right? So they have a claim on income and asset, similar to bond. Okay, so let me ask you a question. What is the claim for income for bond?
Income from bond is coupon amount.
Okay, so this is how about the priority? Priority.
Yes. This is
For the
priority.
bond, yes.
Yes.
The first one,
It's
right? The
priority.
first priority, right? So this is also the first priority. All right. So common stock is a residual. Residual. So it is a residual, meaning that it is the last one. It is last one, meaning that it is the when you have distributed it to the bondholder, right? The private stockholder, then it goes to the common stock holder. So they are the final or the last person who will receive all the claim, either in income or in the income or in asset. Okay, so income is from your net income, and this one asset in the event of bankruptcy.
Bankruptcy.
In the event of bankruptcy. All right. Okay. So this is the claim on income, and this is the claim on assets. Still a residual claim on asset. So we are talking about residual claim on asset. So voting right. So this is also another characteristic of the stockholder, common stockholder, where they have a voting right. Okay, so this voting right is actually a right for you to elect the board of director, and at the same time you are electing the board of management, and the management. Okay, so all right, so let's do on the valuation. Okay, valuation of the common stock. Okay, so agency cost is a theory which explaining the relationship between the ownership or the owner of the company, or a common stockholder, with respect to the managers. Okay, so meaning that the common stockholder does not know the owners what is happening in the company, because it will be run by the managers. Okay, so therefore, how are we going to do that? Okay, so you have a mechanism of control, monitoring, and take over. Okay, so this will be explained in agency theory. Agency theory. Okay, right. So the valuation, the valuation of common stock. Okay, let's recap on what we have learned in bond valuation. Okay, so bond valuation. So we have this coupon payment, right? Coupon payment. And we have maturity. Okay, so what we have here is actually we have par value. Par value of 1,000, right? And this is the value for
Present
that
value, bond value.
bond value. All right, so this is how you're going to use do the calculation on valuation of that. So what are the discount rate is YTM. Okay, so for common stocks, right? So this dividend, right? This dividend, right? This dividend is not fixed. Okay, so, right? So in a way that this is dividend, and this is actually infinity. Because we don't know, n is unknown. Unknown, right? So what we can expect is actually what is the next dividend. The next dividend. So how to find the value for common stock is actually by looking at the next dividend. Okay, so in next dividend, we are using in this dividend discount model. Dividend discount model, we assume that there is a growth in the dividend. Growth of the dividend. Okay, let's see the formula for this. Okay, so to estimate the amount of timing of the stock of the receipt of the future cash flow. So this is in terms of dividend, right? Evaluate the riskiness of the common stock in order to calculate the return. Okay, and the third one is actually calculate the present value of the expected dividend. So what we are looking as the expected dividend. So when we want to calculate the expected dividend, we have to expected return for common stocks. Then only we can find the value for common stocks. Okay, so let's see the formula. The formula value for common stock equal to value for common stock equal to D0 1 plus G is a growth, right? And then minus R common stock minus G. Okay, so we can conclude this as, right? We can conclude this as D1 because this is a next dividend. Next dividend, right? So D1 are stock minus, okay? So meaning that now we want to see what is the next dividend here by looking at D0. For instance, D0 is 2 ringgit, okay? And you expect a growth of 5%, okay? So what will be your D1? D1 equal to 2, 1 plus 0 0.05.
2.1.
Right? So 2.1. 2.10. So meaning that we expect this as 2.10, right? So this is D1. Okay. Remember, when we want to find the common stock, or this also we can put as P0, P0, okay, we have to find D1. Yeah. And then what if our rate expected return for common stocks is 10%? So what will be the PO or value for common stock here will be 2.10 divided by 0.10 minus 0.05. Okay, so what will be the answer here?
$42. 42.
So meaning that the value of the stock should be 42. Okay, so if the market price is selling at 40, right? So it is as the market is undervalued. What if the in the market is selling 43, meaning that the market is
Overstay.
value. So this is under value, this is overvalue. So when are you going to purchase? If it is undervalue or overvalue?
Purchase undervalue.
Purchase undervalue, right? So meaning that this intrinsic value is a fair value. This is intrinsic value is a fair value. So that's why when you do the calculations for common stock later on in your FEP, you must comment this with what is the what we call it as a current market price of the stock. That's why we ask you to find the company who is actually having the common stock in the market, in the capital market. Okay, because we want you to evaluate this. We want to comment, you to comment on what is the value of the stocks. Okay, all right. So there is a few way. Okay, so now let's deal with this formula. Let's deal with this formula, right? Okay. POP0 or value for common stock equal to T1 R minus G, right? Minus for common stock, right? So how to find, this is only on formula wise, with this formula. So how you gonna find R for common stock? We have a lot of engineers here. So engineer, please. Engineer?
Actually, we can use Excel, correct?
Huh?
We cannot use Excel. There is equation in Excel for
RCS. Find the RCS.
D1 divided by P plus G.
Exactly. Okay, so this is one formula.
Yes.
Okay.
Yes.
So how are you going to find G here? Equal to?
This is the market growth.
D1 minus D2, D0 over D0. It's the gross, right? the gross, the dividends gross, which is
D1
D1
divided
minus D0
by VC. Oh. P
D1?
P no, RCS minus D1 divided by
RCS minus D1 VCS. Okay, so this VCS also you can replace by PO, okay, or you can put as D1 PO plus G. Okay, this one also you can put as RCS minus D1 PO, right? RCS minus D1 minus PO. Okay, so this is mathematically. Okay, so mathematically. Okay, so when you want to answer FEEP, what you have to find is that, okay, the G is actually by looking at the ROE times B. So what is B? B is a clawback. Okay, so what is the clawback? Is a retained earning. This is the retained earning, percentage of retained earning. Okay, how to find percentage of retained earning? B equal to 1 minus dividend payout ratio. Okay, so I have given you, right? So I have given you this formula. I have given you this formula. So make use of this formula. All right. So B is a clawback. So why we use B here? All right. So knowing that retained earning is actually your dividend which is not distributed. Okay. Again, I repeat, the dividend or the net income, right? The net income that is not distributed to the common stockholder. So how are we going to use this, right? So this money is belong to the stockholder, to the shareholder. But what the company do is that they retain the money. They retain the money for the growth of the company. For the growth of the company. So therefore, right, we expect this investment of the net income is for the growth of the next dividend. For the growth of the next dividend. So that's why we are actually using this B, right? The B is a clawback ratio, right? Clawback ratio to calculate on G. So how are you going to find ROE? ROE is in the, which one? Financial report. Okay, so this is in financial report. And this is also in financial. So which one is income statement lah? ROE is from income statement. This is also from income statement. This is also from income statement. Okay, so this is the calculation of G. Calculation of our common stock. We have two. We have two methods here. One is actually by using the mathematics, and second one we are using the CAPM formula. CAPM formula. CAPM formula states that so expected return for common stock equal to risk-free rate plus beta. Beta for company,
industry.
right? Beta for common stock, right? RM minus RF. So what is RM? RM is a return for market, and RF is return. This is a risk-free rate. Okay, so in question normally they will give you this risk-free rate. Risk-free rate. Okay, how to find the proxy for this risk-free rate is by looking the proxy for 3 months treasury bill. So what you have to do is that you have to go to Bank Negara website and you have to look at what is the 3-month treasury bills interest rate. So this rate I think now is I think maybe it's 3, something like that. Okay, I can't remember. You can see in the Bank Negara
Which
website.
website?
Okay,
Bursa Malaysia?
Bank Negara website. Bank Negara, the Central Bank of Malaysia.
Ah, okay.
Yeah, treasury bills. Okay, 3 months treasury, because overnight now is 1.77. Okay, it is between 2 to 3 something lah. Yeah. Okay, so have a look with this. Okay, and try to find the beta for the company. Okay, just go and visit the website of the company and try to find the beta for the company. Okay, if you want to find the expected return for that company. Yeah. Okay, so this is one of the this is the equation to find what is the expected return for common stock. Okay, so all this has been given. This has been given in the handout. Okay, in the handout formula. So what you have to do is that you try out all these activity down here. Okay, so this is how they show you how to find the value, how to find the value of common stock, right? Okay, value for common stock, and here is actually they also, okay, so this is expected return for common stock. So this is the risk free RF plus beta, beta for common stock, right? And expected return, expected return for market minus RF. Okay, so this is the formula, and this is the growth. The growth, right? The growth, and this is the formula for growth. Okay, so this one is dividend payout ratio. Dividend per earning. Okay, so 1 minus, so just now G equal to ROE times B, right? So this is the formula for B. Dividend payout ratio. So this is dividend payout. Okay, so important definition. So I want you to look into all this definition, right? And let's see. Let's see on the preferred stocks valuation. Okay, preferred stock valuation. This is a preferred stock. Okay, so for preferred stock, so common stock, we know that. Okay, so this common stock, right? This dividend is not fixed, right? This is common stock, meaning that we expect it on the growth, right? But for preferred stock, this dividend is fixed, meaning that it's fixed for say like 10 ringgit, so it will be 10 ringgit. Yeah, it's a promise return. It's a promise return. So meaning that here, the remember when we learn to do the calculation for perpetuity. Remember perpetuity, right? Perpetuity we have two. One is a level perpetuity. Another one is for the growth. Growing perpetuity. This is level perpetuity, and another one is a growing perpetuity. So common stock is using the growing perpetuity formula, but preferred stock using a level perpetuity formula. So what is the formula, right? So value for preferred stock equal to dividend, because the dividend will be fixed here, D1 R minus G, so meaning that this is return for common stock. Okay, so this is value for common stock. So since that the dividend for D1 and D0, D1, D2 is fixed, so therefore, regardless of what, we are still writing it as a dividend, meaning that these are the dividend. All right, so meaning that there is no D1, D2, or D1, D3, or whatsoever, because the dividend is the same. All right, and do we have a growth? We don't have a growth, right? So the dividend, they don't have a growth. So we only have the return for preferred. So this is the formula on valuating the value for preferred stock. Value for preferred stock. Okay, so let's see the characteristic. Okay, so features of preferred stock dividend in general, size of preferred stock dividend is fixed. All right, so meaning that the dividend is fixed. So either is stated as a dollar amount or as a percentage of preferred stock par value. So meaning that par value here is not 1,000, not only 1,000 or 100,000. It can be 500, it can be 200, you know, it is a stated. It is stated, all right? Okay, so multiple classes meaning that a company can issue a multiple preferred stock. Right? Meaning that if they have preferred stock issue 1, issue 2, issue 3, issue 4, or whatsoever. Okay? So meaning that they this issue 1 may have a different characteristic, may have a different what do you call it as a dividend payout. Okay? Compared to the second one, third, and fourth. So each of these has a different term. So that's why they call it as a different characteristic. Different characteristic. Okay. So let's see claim of asset and income. The claim of preferred stock have a priority over those common stock. See, when we are looking at income, claim of income and asset, we know that bond is the first one, right? Preferred stock, second one, and common stock is the last one. So we can see that it is superior towards the common stockholder. Okay, so although that we are talking this as the residual, right? Residual can be can get more than what the bondholder and preferred stockholder receive, right? That's why this common stockholder, right, is the owner of the company, so they have a power to elect. So elect the board of director. So they have a voting right lah, voting right to elect the board of director and the management team. Okay, so this is features on the claim of asset, and preferred stock is also a hybrid security. Why? Because it is a combination of common stock and debt. Okay, so for fixed dividend, right? For fixed dividend, fixed dividend is actually following the bond characteristic. Although they don't have any stated maturity date, but the fixed dividend replicate the bond characteristic. Okay, so what is actually replicating the common stock is actually they have a dividend. Dividend. This dividend is only for this is similar to common stock, right? And they also have no fixed maturity. Okay, similar to the common stock holder. Okay, but okay, so when we are talking about dividend, right? So it is a promise lah, right? This is also a promise. But with non-payment of dividend, they are not actually they are not be claiming as a bankrupt. Why? Because they be able they can accumulate the dividend and pay on the next year. Right? Okay, so this is the preferred stock. Okay, so preferred stock calculation very simple. Okay, let's see one. Okay, let's see one here, annual dividend. So this is annual dividend. So this is the P0 or value for preferred stock equal to annual dividend, the expected required yield on preferred stock, right? Return for preferred. Okay, so okay, let's look at the example. Okay. Okay, so this is the what we call as a summary of the calculation. Okay. Okay, so this is the rate of return for preferred stock is 8%. Okay, so the dividend is 12%, right? So how to find the PO? PO or value for preferred stock by dividing 12 ringgit with 0.08. Okay, so what is the value here? Hundred and is it 150?
Yes.
Okay, 150. Okay, so this is 150, right? So 12 ringgit. So the value for preferred stock is merely by 12 ringgit divided by 0.08. Okay, right. So
This value
yeah,
being calculated by the company, right?
pardon?
This value now is being calculated by the company, correct?
No. This is you as an investor.
Okay,
So this is the
but there will be
pardon?
some price. There will be some price for the preferred stock in the market, right?
Yes, this is the price in the
Maybe
market. So this is intrinsic value. Intrinsic value is similar as to what you have calculated in common stock just now.
yes, but I mean the stock price, the preferred stock price may be different from this value, maybe higher or lower.
Oh yeah, because this is intrinsic value. Yes, correct. So this is the intrinsic value. So the market price could be higher or lower lah. So whether it is underpricing or underpricing or overpricing. Okay. Correct. Okay. So these are the these are the calculations of common stock and preferred stock. Okay, so common stock and preferred stock. So now what we're going to look is that what is the how to say it in a way that okay, the calculation that we have done much earlier on bond, on preferred stock, on common stock is actually on the investor point of view. Okay, so Miro, Malu ada kelas ni. Jangan ganggu Malu. Okay, Malu ada kelas. Okay, so what we look here is actually on the investor point of view. Okay, so in next chapter, what we're going to look at is that we're going to look this in the point of view of the corporation when you are actually issuing the bond, the preferred stock, and the common stock. Okay, so shall I have like 5 minutes break before we go to the cost of capital, weighted average cost of capital?
Okay, okay.
All right, so
Okay.
we have a 5 minutes break. Okay, so we are not going to to take a break for more than that because we want to continue that and the activity. Because we are almost taking like 20 hours just now, 20 minutes just now on the FEAP. So I think we need to continue on that activity. Okay, so let's have a break now. And we come back at what is now 05, and we come back at 9:10. Shall we do that? Okay. All right. Okay.
Sure.
Okay, guys, have you taken your coffee? Did you manage to make your coffee?
Water only.
Just water, sir.
Pardon?
Just water.
Okay, so this cost of capital is very simple, and it's a short one, right? Okay, so let me share with you guys this. Oh, okay. Okay. All right. So cost of capital. So what we have learned so far is actually the valuation. Okay, the valuation of debt or bond, right? The YTM and at the YTM, right? And then we also learn how to do the value for common stock. We also calculated the expected return for common stock or return for common stock, and we also calculated growth. Okay, all right. So we also do the calculation for preferred stock, and we also look into the expected return for preferred stock. So in this, we don't do. So to sum up this, right? So in investor, in the point, in the investor point of view, we are looking this value as a market price. Market price, right? Market price, right? This is also a market price for preferred stock, okay? And we want to compare, okay? So this intrinsic value, we want to compare with the price, okay? So we want to see whether it is overvalued or undervalued. Okay, so for the perspective of investor, this will be your expected return for your investment. Okay, so this is in the investor point of view, right? But in the corporation point of view, this expected return will be a cost for them to issue debt, cost of them to issue common stock, and cost for them to issue preferred stock. Okay, why? Because if they want to issue the debt, the bond, the common stocks, the preferred stock, they have to follow what is actually the price of the bond, the common stock, and preferred stock of the in the market, of the company in the market. Okay, so therefore, right, in comparing with the perspective of the investor and the corporation, okay, let's see, okay, so this is expected return or return for bond will be YTM, correct? Okay, return for common stock will be R common stock, and return for preferred stock will be RP. So this is in a point of view of investor, but for corporation in issuing the bond, issuing the security, security. So for bond, they call it as a cost of debt. Okay, so we have a breakdown here, right? And for common stock, it's the cost of common stock. And for preferred stock, we say as a cost for preferred stock. However, in corporation, when we are dealing with debt, we always look into the cost of debt after tax. Why? Because in our income statement, when we have revenue and we have done our cost of goods sold, our expenses, then we have earning before interest and tax. And what you do is that after earning before interest and tax, you minus interest. So this interest is all the interest for the long-term bond or long-term debt. Okay, so then only you minus your tax. So when you have interest, when you have bond interest for bond or coupon payment, meaning that when you have interest for your debt, your tax payment will be reduced. This is what we call as a tax rebate. Tax rebate. So that's why to the corporation, the cost of issuing debt, right, is lower after we consider an after-tax cost of debt. So that's why we want to find what is the cost of debt after tax by calculating with cost of debt 1 minus the tax rate. Okay, all right. Okay, so these are the component of the capital structure. These are the component of capital structure. So how are we gonna see what is our WACC? Okay, I want you to read all this kind of all these notes, all right? And cost of capital, right? So we can view the return that investor expect to receive on the firm stock and bonds as the cost to the firm of attracting the capital used to fund the firm investment. We can think of the cost of capital for a firm as a weighted average of the required return of the securities that are used to finance the business. We refer to this as a weighted average cost of capital. Okay, weighted average of cost of capital, meaning that that is a weightage of the component of the capital. Okay, so meaning that if it is 20% of debt, 30% of debt, and preferred stock, okay, 50% of common stock. So meaning that, okay, what we will do is that for WACC is actually by looking at the weightage for debt time cost of debt after tax plus weightage for preferred stock times cost of preferred stock plus weightage for common stock and cost for common stocks. Okay, so this is WACC. Okay, so meaning that now WACC incorporates the required rate of return demanded by the investor, right? So the investor. So that's why we are looking at the two different perspectives. The first calculation, we look at the investor point of view, but now we are looking at the issuer point of view or the corporation point of view. Okay, let's move on. All right, so I want you to read all this, right? So the firm WACC is used in a number of ways. WACC is used to value the entire firm. Okay, that is one thing. But what we want to know is the second one is that starting point for determining the discount rate for individual investment project. Meaning that if you have a project, for instance, 1 million project, right? So if this were financed with 400,000 of common stock, 500,000 of preferred stock, and 100,000 of debt, right? So meaning that, right? So this WACC, the WACC for this is a basis of calculating the present value of the project. Okay, we will learn this in the investment analysis, investment decision making, and investment analysis. All right. So this will be on the next meeting. Okay. So this WACC is a discount rate. Discount rate for the project. So whether we want to accept or not the project, so we will do the discount. Discount rate. We discount all the future cash flow of the project to find what is the net present value of the cash flow. So we will do that. Okay. Finally, firms sometimes use WACC to evaluate their performance. All right. To evaluate the performance, meaning that they want to know how high is the capital, how high is the rate of the company to issue a capital. Either it is high or low, depending on what is the perception of the investor towards the company. All right. Okay. So see, okay. So this is the cost of debt after tax. Okay. So cost of debt after tax times the weightage of debt. All right. And these are the components, right? So these are the components. So meaning that this is weightage for debt. This is weighted for preferred stock and weighted for common stock. And this is the cost of debt after tax and cost of preferred stock and cost of common stock. Remember, okay? So this cost of debt after tax, not cost of debt. So meaning that if you have calculated the YTM, right? So you have to translate this, right? So YTM is equivalent to cost of debt. So you have to convert cost of debt after tax by using the 1 minus tax, right? So you have to remember this step. You have to remember this step in calculating WACC. Okay, so these are the formula. Okay, let's see if we have the, okay. First, how you do is that you define the firm capital structure, okay, by looking at the weight. This weightage is actually based on current market value. We have to do a current market value because we have a few stock that we have issued long time ago. So meaning that if you are still using the historical prices, so the prices will not be accurate. Because it is already historical. So what we do is that we look into the current market value. Current market value. Meaning that we are looking at the price lah, at the current market price lah of the stock. So if a common stock, you go to find what is the common stock price. So if a preferred stock, so you go and find what is the price. P0, P0. So this one is actually the market price, market price. Okay, market price. So if bond also, you have to find the market price of the bond. Okay, so then estimate the cost of each source of financing. So meaning that you have to find YTM, you have to find R for common stock, you have to find R for PS. So this will be representing the K for debt, common stock, and K for preferred stock. And what you have to do a treatment here is YTM. You have to translate to after. You have to translate it to after tax cost of debt. Okay. So calculate the weighted average cost of capital from all the sources. So what are the formula just now? It's actually WACC equal to weightage for debt times cost of debt after tax. I'm repeating this again because this will be in your next quiz. Weighted for common stock, cost of common stock plus weightage for preferred stock and cost of preferred stock. Okay, so these are the formula. Okay, so I want you to read all this again. All right, so these are the problem, right? So these are the example. So this is the estimating the cost of individual sources of capital. So let's see, so the cost of that is yield to maturity. Yield to maturity, not the coupon rate. Okay, you have to find what is YTM. Okay, this one you have to find YTM. Okay, so for so then after that you have to find after tax cost of debt by calculating the yield just now, 1 minus tax. Okay, so this is cost of debt. And then look at the cost of preferred stock. Okay, so cost of preferred stock is a return for investor required. So this one is cost of preferred stock. Taking this cost of preferred stock. See, remember this, the formula, right? Just now, when we calculated the P, right? P equal to D divided by R for preferred stock, right? So this is R for preferred stock. So see this formula. So we bring this R here, right? So R for preferred stock equal to dividend divided by P. All right. So this R for preferred stock is actually DK for preferred stock. This is what we have learned before, right? So just use the same formula to find the cost for preferred stock. Same goes to the common stock equity. So common stock equity using the dividend growth model, this is actually from the equation, and this is from the CAPM. This is from the CAPM. Okay. Okay, so this from the formula, and do we have it from the, let's see whether we have a CAPM. So this is the CAPM. This is the CAPM. All right. So so you're going to see it like complicated, so complicated, right? So cost for equity equal to RF plus, this is beta for common stock, right? RM minus RF. See this RM minus RF, minus RF. So this is the formula. This is the CAPM formula. Okay, so this is how we're going to find the cost of common stock, cost of common stock, cost of preferred stock, and cost for bond. We have learned this. We have learned this so far. So that's why I said that this chapter is actually very simple, because we have learned all this before. We have learned all this before. Okay, so any question before we go for the activity? So I want you to read all this, because this is all self-explanatory slide. So read this, and you'll be able to answer the question in your quiz 2. Quiz 2. All right. So quiz 2 will cover the bond, bond, common stock, preferred stock, and WACC. WACC. Very simple. So this flotation cost is actually talking about the, for instance, you want to the project is, okay, the project is 1 million, for instance. Okay, 1 million. So for you to issue common stock or preferred stock, you may need 100,000. So the capital that you have to generate is actually not 1 million, but it is 1,100,000. So this is 100,000 is a flotation cost. Flotation cost is a cost for you to issue the capital. You read all this, then you'll be able to understand. Very simple. Okay, so do we have question for WACC? A question for WACC? I can't see you and I can't hear you. So what I'm going to do is that I'm going to try to keep you guys. Okay, I can't see any faces here. All right, okay. Okay, so yes. Okay. Yes. So I don't see any question mark on your face, but I can see there is a doubt there. I don't know whether you is it because it's too late, or because it's you haven't taken your dinner? Okay, so if there is a
We
question,
heard the word quiz, so we got confused. What is this quiz?
so you have the first quiz, right? You have the first quiz done, right? So so this second quiz is similar to the first one. Okay, this is also 2%, but what you can do is that you can discuss with friends. Meaning that I will open the quiz. I will open the quiz for 1 day. 1 day. So but for you to answer the question, you required only 1 hour. 1 or 2 hours. I think I'll give you 2 hours because this is quite difficult. Okay, so you just find the date. You just find the day for your second quiz. Then I open it for the whole day, and then you try. Try to attempt on the quiz. It's
Actually, Doctor,
free
I'm still
for
very confused.
you.
When was the first quiz?
You haven't taken your first quiz yet?
No.
Oh my God!
So
You
at least I haven't. So now I'm confused.
Oh, okay. You haven't taken the first
So
quiz?
haven't. Yes, doctor.
Also, I think we don't have.
Are you sure? How come I miss it? Wait.
I really hope we haven't, Doctor. Otherwise, that means I already missed it.
Yeah, I had doubt that maybe I was not here.
Okay. You are actually confusing me. Okay, because most of the section, they have done the quiz. And in fact, they have done the quizzes. Meaning that says, no, quiz. Well, they have done the quiz, the first quiz. Okay, let me check whether I have. Oh my God. Okay, let's decide when are you going to do the first quiz.
Maybe in July, if possible.
What, July? Cannot like everything in July. Okay, wait. You want to do in July, but your FEP you have to submit on at June. In June,
Well, I don't know, frankly speaking, Doctor. We have two tough FEP, one for strategic management, one for finance. And we have economic as well coming soon. So we are in a very bad position. We cannot explain that team now.
Okay, why don't we do okay, tomorrow, what is the day for tomorrow? 12? Can we do quiz 1 tomorrow?
But you are going to doctor tomorrow, right?
Huh?
You have the injection tomorrow, correct?
Ayo, the vaccine, I am taking the vaccine, you are not taking the vaccine. Okay, I'm giving you, okay, do you need time for you to read chapter 1?
Yes, I think so.
Okay.
If you can tell us what is the quiz 1, so we can get ready for it.
Okay, so when you're going to do this one?
Tomorrow.
Tomorrow, Okay, let's put it this way. I open it tomorrow and until day after it. I mean the 12th and 13th.
Okay.
Okay, for the
Okay,
time
Doctor.
limit. Okay, so I
What
open
is
it
it
for 2
about, Doctor?
days.
So we can study about it. What is it about?
2 days,
What is the subject for the quiz? Which
Time
chapter?
value of money.
Okay.
Time value of money. Very kacang one, right? Very
Yeah.
easy one lah. I didn't share. Oh, sorry. I didn't share. No wonder. Okay. All right. So this is it lah. Okay. So I didn't share. No wonder. Okay. So this is the
Yeah.
one lah. Okay. What I'm going to do is that I'm going to open it for 2 days. Okay. But the time limit for you to attempt is 1 hour. Okay. So this is a 2% quiz. So you have to attempt lah. So at least I know that you understand what is time value of money. Okay.
Doctor, that's 1 minute on your screen.
It's 1 minute now, yes.
1 minute ah. Sorry lah. You know what?
You can change it to 60.
One day or 1 day, Doctor.
I 2 hour lah.
One day is fine, Doctor.
You know what? Actually, I a bit nervous of tomorrow. I'm a bit nervous of tomorrow.
Which vaccine you are planning
Yeah.
to take?
Okay, so I put it 1 hour so for you to try. Okay. So then I will save this, right? I will save this, and let's deal with your. Okay, let's deal with your second quiz. So this one, open this and hide this. Not that you won't see it. Okay, so this is quiz one. Yo, how I am so forgetful. Okay, so this should be in your meeting 2 last time. Okay, so this will be your second quiz, quiz 2. When are you going to do this? Okay, so this will cover on chapter debt, stock valuation, and cost of capital. Stock valuation meaning that equity lah, common stock and profit stock. Okay, so when are you going to do this?
They are 30 questions, doctor.
I'm also going to give you like these 2 hours because this is a bit difficult. You want this to be and okay, so tomorrow 12, 19 and 20. Are you okay?
Then can you put it like 4 days, 17 to 20, doctor?
17 to
20.
Wow.
Basically, we just go in whenever we can and finish and complete it, right?
Yeah, but you have to complete it within 2 hours.
Yeah, if you
Okay.
open class, you cannot go back. It has to be completed.
So you want to 17 to 20 June, June. 17 to 2 days lah. Enough lah, 2 days, yeah.
19.
And you know what? If I open it for 4 days, you don't know when are you going. You don't know. You think I don't know when you are going to take the quiz? Definitely on the last day. Definitely on the last day. Kan?
Yes. Correct.
Right?
Student behavior.
Why don't we? I just open it 19 and 20. Okay, I open it 19 and 20. Then you can you discuss before that. Okay, you 19, 20. Okay, 2 days, Is it okay?
Yes, doctor.
Okay, 2 hours. Okay. And save.
There is 30 question, doctor. What is this 30 question?
Okay, let's see. So let's see what are the question here. Okay, so there are 30 questions. 30 questions.
2 minutes each,
So 30 questions. I shuffle the question. So there are objective. They are objective question and true and false. Okay, so this is on the theory part, and these are on the calculation part. So calculation part, you have 20 questions, and 10 questions for the theory. Okay, so all the calculation, if the calculation is complicated, so I give you 2 marks here lah. Okay, so maximum grade is 2. Okay, so you want to see? Okay, you want to see on your quiz 1? Okay, quiz 1, in fact, a bit simpler, right? So although there's a lot of calculation, but if you can find the financial calculator in the web, okay, so yeah, if you can find the financial calculator in the web, so you'll be able to answer it very quickly. So this one is 2. Okay, so I also shuffle the question, right? So you have this objective and true and false. The objective and true and false. So we have 41 questions here. Yeah, right. So you pardon? Yes. Yes, dear. Okay. Do you think enough 1 hour for that?
How many
Enough,
questions again, Doctor?
41?
41.
Doctor,
41.
for calculation, you need the methodology or just the answer?
No, just the answer. Just the answer.
It's all multiple choice, is it, Doctor?
Multiple
Oh,
choice.
we keep it.
Yes.
Okay.
Okay, this is 2% exercise. Okay, so the main reason for this exercise is actually to evaluate your understanding. Okay, so that's why I told you you can call you can discuss with your friend to do this question, because the point, the major concern is that you know how to calculate time value of money. You know how to calculate time value of money. So this is like a collective, like macam like a group assignment as well.
So we
Okay.
can divide the question, Doctor, between us, like if each one answer it.
Wow. I show you the question here. So if you can capture it, so I think if you're smart, you can capture all these questions. I opened it for quite some time just now. So you should be able to capture some of it. Okay, but it is not that difficult. So this is not that difficult, because last time most of the students they're able to answer this correctly. Full mark. Full mark. All right. Okay. So do we have time for the activity? All right. Yes, we have. At least we have one. Okay. So let's go on with the activity. So we don't have a break, huh?
Yeah, Doctor.
Okay, we don't have a break. So let's have an activity now. Okay. So what you have done in this meeting 4 is that you have done this, you have selected one of it, and then what you have to do is that you have to put it in the group forum. Okay. So what you do is that okay. So this is what Shahrul has done on the comment. So what you do is, okay, let me show you your setting. I switch your role to student role. Okay, if you can't manage to do this today, so you can do it after this, right? So do one round, do first round, second round, okay, and third round, okay. For that fourth round, what we're gonna do is that we try to do in class, and we try to do in class, okay. What I want you to do is that I want you to comment on the strategy or strategies developed by your friends. Okay, so this is actually to further understand what are the scenario in the company, and also what are the recent or the current scenario of the issue in finance, in a real issue in okay. So okay, for instance here, so this is the setting for student setting lah. Okay, let me put it in the, okay, so this is the setting. So what you do is that you reply. For instance, Sharul, in which group? Group 1, right? This is group 1. Okay. So Sharul, and then your friend will reply here. Okay. So what you understand? Round 1, did you understand about the issue? Choose one listed and identify the root cause of the issue. So I will put here the root cause of the issue, right? Identify the root cause of the issue is blah, 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 blah. I will write down, okay? And then another student will also write what is your understanding of the issue, all right? So meaning that if you have 4 person in the group, so you should have a 4 reply. So this is in first round. Second round, try to relate it with the 5 principles of finance, okay? So what you do is that you relate it, okay? What is the issue violating on the 5 principles of finance, or what is the issue is related to? For instance, okay, so this is what this is on Bitcoin, Okay, so Bitcoin, you may relate this as the cash flow. You may relate it to the, for instance, like information reflect the market price of the Bitcoin. Okay, you can relate that. Okay, so that will be on the information, right? Information. So that will be principle number 4, right? So you type is principle number 4. So how it violating? Okay, for instance, here principle another different reply. There will be another different reply. So principle 4. So what is stated in principle 4 and what is this? This issue or this article is relating to principle number 4. Explain. Okay. Then you go to the round 3, where you suggest the strategy or strategies to tackle the issue. For instance, you said that the volatility of Bitcoin is so much as it is reflected, the price is reflected with demand and supply of the Bitcoin. So how you suggest this to be corrected? Okay, so meaning that you have a proper market, you have like, for instance, okay, this is for example, a proper market. So if you say a proper market, why you have to have a market? So these are kind of things that you need to discuss. You discuss. So the round 4 will be done in the class because I will select which group to comment on which group. Right? So I will decide on. So this is like you have to know lah. You have to know. Meaning that you have to visit your friends forum, okay, and then you try to understand what is the issue. And when I give you the assignment for the 4th round in the class, so I just give you 20 minutes. You comment on that, and we have discuss. Okay, all right. So
Sorry, doctor, can I have a question?
yes,
So
yes.
when you say group 1, for example, I'm in group 1, do I have to jump into the answering each round for group 1, or
Yes.
just to every member should involve in this?
Yes, every member's involved here. So you should give your comment. Okay?
And then I have to answer the other group, like group 2 and group 3, is it?
Yeah, that will be later.
And
If you are group 1,
round
you
4.
settle with your group first. Yeah, you settle with your group first. All 3 rounds. All 3 rounds, right? Okay. So why don't we just do the first round first? Okay. So I'm giving you. Okay, okay, let me cancel this. Right? So you cancel this and let's do it for the first round. First round. Sharing. Okay. So I will break you into a breakout room. Breakout room. So you will choose your own group. Okay. I will create. Sorry. How many groups you have? 3, right?
Three groups.
Yes. Okay. So I will set you here for I will set you 20 minutes here. Oh no. For first one, I just set you 10 minutes. 10 minutes because we don't have much time for that. Okay, 10 minutes. Okay. And after 10 minutes, you will be called back to the to the main group. Okay. So I'm start the breakout session now. Do round 1 first. Do round 1 first. Okay. So breakout session start now. Okay, go to your room. How to go to the room? How to go to the room? You know how to go to the room? At the drop down list up there, at the menu, click breakout session and then choose your breakout session room. So Tariq is already there, Sharul is already there. Okay, 10 minutes, Emil?
Sorry, how do I do that?
Which group are you from?
Sorry?
Which
Group 1.
Which group are you belong to?
Group 1.
Group 1, Okay. 1. Okay, I move you to the group 1. Okay. So Nurul Fana, okay? Nurul, sign.
I
Okay, Nurul boleh?
Dah ada group dengan Christine, Vero.
You dengan siapa? Vero, group
Christine,
2 kan?
Vero. We
Okay.
group tu.
Group 2 kejap Group 2. Right. Okay.
Christine,
Dan
Vero.
Hamid. Which group Hamid? Hamid? Oh, you're right. Okay, let's see. So what have you done? So let's check. Okay, your CPU usage is high. Okay. So I can't afford to off my virtual background. If I off it, so you can see a lot of things behind the story. Okay, so okay, let's see. Okay, so let's see here, right? So meeting for okay, so group one. Okay, group one, can you present group one? Group one.
Sure, Doctor.
All right. So this is it. Okay. Who's going to present?
We'll follow the sequence in the chat, Doctor. Is that fine?
No problem. Yes.
Yeah. So basically, the article that we were looking at was looking at Bitcoin, the evolution of Bitcoin, how it evolved from being a cryptocurrency to now being almost accepted in the mainstream financial market. Right. So it follows the path or the journey of a company called Genesis that deals with Bitcoin and the challenges that they face initially when people want to buy Bitcoin and they don't know how to start. And nowadays, what they are doing is they are using Bitcoin as a way to, or rather as a base to provide financial services like lending and investment.
Yes. So you are actually looking at evolution of the Bitcoin, right? Correct?
Yes.
So, yeah. So now Bitcoin is one of the major security in cryptocurrencies. Okay, we will see that. All right. So these are so what you mean by that? Meaning that the investor does not know how to trade the Bitcoin or what you mean by that? You don't have
maybe as my team explain the issues, those will come in the light also.
Okay.
I'll pass to Amil.
Yeah.
So meaning that
thanks.
there is not a proper market, not proper market,
Not proper
Yes.
market and part of it. Amil?
Okay, so
Yes.
Emil?
Yeah. So from the articles, basically the root cause is that we tend to see that the biggest risk is regulatory uncertainties. So there are many questions on how government set up rules and on central bank also set up rules handling the Bitcoin transaction. So there's in the article also mentioned about in 2013 China banned its own bank from handling Bitcoin transactions. So this still it's not confirmed yet in terms of like the regulatory from the government, because the government around the world see it might be as a threat to their economic sovereignty. So there might be some government who's already applied this Bitcoin or set up rules.
Okay, so what happened to China recently?
They just banned handling the transaction. I think they block it all because it's internet based, so they block the all transaction online from and outside, inside and outside China.
Yeah, you can see that with the step taken by China, you can see that the price of the Bitcoin has a tremendous fall. On the recent development. Okay, thank you. All right, so Tariq?
Yes, one of the issues with the Bitcoin that it has a finite amount of Bitcoins. So this is a limited supply. And just in case if anything happen on the demand side, which drive the demand to increase, the price will go up, and it will go up quickly, and it will go up to a big value. When it was launched earlier in 2009, sorry, I just put 19 by mistake here. It is 2009. The price was only $82. Now the price in 2020 reached up to $35,623, and that's because of the increase of the trust on the Bitcoin as an asset for investment, and so on. The price increase due to this limited supply as well. I will pass to
Okay.
Said for next point.
So
All right.
another issue in Bitcoin is its volatility. It can swing up or down very fast. So it's very high risk to the investor to invest in Bitcoin.
Yeah, so
Okay,
it is one of the security, because last time we noticed that common stock is the most volatile securities in the market. But now we can see that Bitcoin is one is
More than
actually beating
more than that.
beating the common stocks for the
Because
volatility.
there are
Okay.
still a lot of uncertainties in the
So how many group
Bitcoin.
members you are? Five,
Five.
group member. Okay,
Yes.
right. So
Yes,
Ibrahim.
the last, yes, I think this is the major root cause for the major problem for Bitcoin, that the liquidity issue due to limited acceptance. As of today, I think there is a lot of people cannot understand the mechanism of the Bitcoin, how it works, how they handle. So the majority culture, as a culture, it is not public for public to understand how it goes. So it is not understood in the right and it's not in the right track as of today.
All right. Okay. 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 So this is the issue of liquidity, right? So
Yes.
okay. So this is from group 1. So let's see from group 2. Group 2. Oh, very interesting, very interesting when we talk about cryptocurrency. So actually, I wanted to share with you one. Okay, if group 1, if group 2 is ready, group 2 is ready.
Yeah.
Okay.
Okay.
Okay, wait, where is it? Okay, so this is group 2. Okay.
Yes, let me just cover the background first. This we have taken a topic on the Lembaga Tabung Angkatan Tentera, that is LTAT. And this is a government statutory body that provides a retirement saving scheme for the officers and also all the rank of Malaysian Armed Forces and the volunteer forces. So the contribution are required by the employees from their 10% from their monthly salary, as the government will be contributing 15%. And there can be also have a voluntary contributors. The contribution a minimum of 25 ringgit and maximum of 2,000 ringgit monthly. So the following will be covered by my teammate.
All right. Okay, Farhana.
Okay, regarding LTAT investment, their portfolio got various asset classes and key sector in the Malaysian economy, which is guided by strategic asset allocation framework. Next, the portfolio continues to be rebalanced toward the achieve an optimum portfolio mix in line the investment objective and risk tolerance limit of the fund. But then today, it has exposure both public and private equity, real estate, fixed income, and money market asset classes. So they include the sector in the financial, property, oil and gas, pharmaceutical product, heavy industry, and many more lah. They got a various type of exposure. Yes.
Okay, so meaning that now they have diverse sector of investment lah, meaning that in term of security,
Yes.
in term of sector, exposure, the exposure is
Property.
wider lah,
Yes.
not
Yes.
limited to today. You mean by today lah? Today.
Yes.
Oh, today. Okay. All right. Okay. Okay. So this article is quite long lah. It is quite old. This article is in 2019. If I'm not mistaken, right? So they have corrected lah some of the issue here. Okay. Right. So
Issue, yes.
Eva.
Doctor, Feroil, can I go first before Eva?
Can, no
So,
problem. Yeah,
so
Firdaus.
the issue is, in 2019, when they elect a new LTAT chief executive, they announced the lowest ever dividends of 2% compared with the minimum 6% they paid before for the past 40 years. So, of course, this announcement sparked a lot of attention in Malaysia. So, at the same year, they did a audit, and they found there's a few issue within this LTET. So the first issue is the return earning was impacted due to overpayment of dividend. So actually they have a lower income. I mean, their income is lower than the dividend that they should give. That's the first one. And the second one, overstatement of LTAT asset between 2015 to 2017. So yeah.
Yeah, this is the one lah. So this is with regards to the dividend policy, and the what you call it as a realized return, realized return of the project which is actually not payable yet. So if you read through, there is a issue where it's also related to boosted. Boosted. So it's actually when you look at LAT, when you read together with boosted, then you know who is actually the main, what they call it as a main culprit here. Okay, so because LTAT has been tremendous investment in boosted holding, so when boosted unable to perform, so their investment are at risk. Okay, all right. So,
So I pass to Eva, doctor, for the next issue.
Okay. All right. Thank you. So, Eva?
Thank you, Vero. Good night, Doctor. Can I hear me?
Yes.
Based on Vero explanation just now, the problem from the LTAT. So this is probably due to the financial and technical due diligence exercise were not properly undertaken by LTAT prior to investing in the above company. It was not based on sound investment policy and also procedure. And there's also issue for LTATs where there's an unsold property asset worth about RM 45 million related to at condominiums which are unsold at December 2018, even though it was completed on 2015. This was the issue on the LTAT part. So there's another issue will be discussed by my colleague Christine.
Okay.
Good evening, Dr. Da and my fellow friends. Just now, Dr. Da mentioned about the boosted holding Berhad. Actually, since 2014, these LTAT have these liquidity issues, whereby they were selling very profitable shares and significant increase in the shareholding and also the subsidiaries and has resulted in over concentration in the group. And also we can see that there's increase almost 50% from 2.1 billion to 3.1 billion, and then the share also increased by more than 83% from 833 million to 1.525 billion shares in 2018. Another issue is the outstanding dividend from the subsidiaries was not received. There was high dividend declared in 2017, and that actually up to the date is the outstanding is not paid in full yet. Up to the date of the articles, I mean 2019. There is also lack of control in unit trust. The practice of buying unit trust in order for the members to receive special bonus was found to be detrimental to LTAT ability to control and actively manage the fund as well.
This is similar to what the KWSP is doing. So we will we have an options to invest some of our account one, if I'm not mistaken, account one to invest in mutual fund, right?
Yeah.
So that's why KWSP put some limits to it, because they want their cash flow to be affected. If everybody is like borrowing from KWSP, then when
invest
the
in that.
can have money to invest, right? So this is the issue lah. Okay, right. Okay, very good. Okay, so since that you have done this much earlier, are you?
Yeah, actually, we have discussed about this 2 days ago, and then we were looking at some articles as well.
All right.
And,
Okay. Good,
and
good,
actually,
good.
we prepared in slide presentation actually in
Wow.
PowerPoint.
No wonder lah. No wonder. So that's why actually in my instruction, I say put it in the slide presentation, put it in the forum, right?
We saw
You mentioned slide,
something
doctor,
regarding the
and
slide presentation.
Oh, from the e-learning. Oh, I haven't changed the e-learning. No wonder.
yeah,
Okay, okay, okay,
and
okay.
then there was
That is my
there's a
mistake.
slot for us to submit as well there.
Okay, Abad, no problem. So you just translate it to the forum. Why? Because it's that you don't have to submit now. So this one very easy because you don't have to submit. And so we just look into this forum. Okay, thank you. Thank you, group 2. And then group 3. So which article do you have?
Hi, Dr. Satish here.
Hi. Yes.
So, Doctor, we took the article number 5, highlight on the short-term economic recovery plan.
Short term. Okay, highlight. Okay, so this is Penjana, right?
Yes, yes, you're right, Doctor. So
Okay,
just to
right.
give
Okay.
some brief
Very good.
highlight before I pass it to my fellow friends. So, Doctor, the article is about our Prime Minister Tan Sri Muhyiddin Yassin have announced some short-term economic recovery plan with the name of Penjana on 5th of June 2020. So, what was the key indication inside the announcement was the ways of recovering back the unemployment issue. Literally, it's correlated with the economy recovery as well. So when we recover the economy, certainly directly the unemployment rate would also recover. So on the meantime, on the recovery plan, there were also some kind of support which was given to the employees or the citizens who have lost the job, and also what kind of initiative that the government is taking in terms of stimulating back the economy. So I think I'll pass it to Sonia so she can explain further on this.
Yes, so the case is
Okay.
telling us the Malaysia unemployment rate was reached 3.9 higher than last year, and the majority the root findings due to the lockdown control order, the tourism close off, and economic market slowdown. So that we're facing many firms out of cash flow difficulty, since there was no sales for months, and suddenly the people facing a huge change and laid off, and even some companies facing the shutdown. So it becomes a terrible economic cycle. Then high employment rate will result in following a significant decrease in the income, hence the cash become important in the period of unemployment. So people were not able to buy goods and decrease the purchasing power in the market. And secondly, the fewer investor will be pull out the market. They were afraid about a high due to high employment rate. So definitely we have negative impact on the market.
Yeah, yeah. We can see that there is a slowdown in the economy due to the pandemic, due to the lockdown. Okay, so actually, I mean, Malaysia's nation is actually unable to sustain anymore. If we have another one more lockdown, total lockdown, like what we have in the first lockdown, okay, meaning that the whole sector is closed, right? So it's going to be a bad impact to our economy. And I don't think that people will be able to sustain for that. Okay, so very good. All right. So Sharon Raj?
Hi, good morning, Doctor. Okay,
Yes.
basically, from what I understand from the article is about the government strategy on how to make or plan for the recovery plan in order to decrease the unemployment rate, which is increasing, especially during this COVID-19 pandemic. So the plan was basically giving subsidiaries to the companies or SMEs companies so that they don't retrench the workers and still keep the workers. Some of the plans was giving tax redemption as well, so that the company can sustain through this COVID-19 pandemic, as the revenue and sales of the company might go down as well. So in other way, how government helps the community was by giving vouchers like e-wallet kind of things in order to make sure that they have money
But
to spend
this is all
throughout their.
helicopter money, you know. This is, I think, this is all helicopter money. So helicopter money meaning that you are actually giving the people money without doing anything. So that we are looking at the, the aspect of production, right? So if the production does not high, and then the economy, the production is not improving, so you are giving the money, and you can see that the inflation is coming in. The inflation is
Yes,
coming in. So that's why these are another issue that we are looking at. Malaysia is actually looking at another on inflation, on inflation side of it. That you can notice now that the prices are actually hiking. At the
yes, yes.
moment, and because of the limited supply, because of production.
Yes.
Yes. Karan Raj?
Yeah, that's all from.
Okay. Okay. Good. Okay, Pavitra?
Hi, Doctor. So, so the
Yes.
major issue from this article is that Malaysia's unemployment rate is still rising due to the pandemic. So the pandemic actually caused a lot of companies to retrench the workers in order to save their business because they are being forced to shut down by the government. And moreover, majority of fresh graduates are not even able to secure a job during the pandemic. So the unemployment rate is actually expected to increase to more than 5.5% by 2020. I think in 2021 it's more than that. So this is actually giving a huge impact to the national income as well, where when the unemployment rate is increasing, the national income will go down. So this will eventually lead to inflation. So in order to overcome this situation, the Malaysian Prime Minister has actually announced an economic recovery plan.
Recovery plan. So this is one of the plan, right?
Yeah.
So okay, so it helps the economy in a way that it helps the entrepreneur lah, entrepreneur to roll over the business, you know, to start or to recoup with the whatever recovery plan that we have lah. So hopefully it's going to be a positive impact on that. Okay, so we'll see lah. We'll see in future what will be happen. And Hamid,
Well, hi,
or you
Doctor.
have to
So,
post here.
yeah, just a quick
Yes.
going through the article. For someone like me who does not live in Malaysia, this article gives me a great insight into what the government is doing to cushion the facts of unemployment. We've had the projection to be going above the 3.9% to 5.5, which is understandable given how long the pandemic is taking to recover. So the government seems to have come up with some schemes and etc. to keep the jobs protected, or also to keep those who have lost the jobs protected. And there's various figures and facts which have been covered by my colleagues right before me. Thank you.
All right. Okay. So this is what actually the recovery plan that has been planned by our government in order to recover from our pandemic, the post-pandemic economy. So we're gonna, inshallah, we're going to revive. Okay, inshallah, we're going to revive, and hopefully that we're gonna survive this pandemic, inshallah. By everybody taking the vaccine. Okay. So okay, let's move on. All right. So let's move on to the activity 2, round 2 and round 3 on your own. Okay. And what we're going to discuss on the next class. Okay, do the same thing, do it in the forum, and then do it in the forum, and then we're going to do the 4th round in class next meeting. Okay, we're going to do this. This is quite interesting, right? So is it Is it interesting? Are you guys find it interesting?
Yes, doctor.
Yes.
Okay.
We had an
So
extended discussion for this.
So this is actually deviating it from all the calculation that we have done. Okay, that's why I mentioned to you that the first half of the session or the semester, we will have all this theory and calculation. So just bear with me. Okay, so when we complete that, then we have all this kind of discussion. So this discussion is kind of a new issue, a new trend of happening in the current scenario. So we will look into this matter in a finance perspective. In a finance perspective. Okay, do you have like 5 minutes? Do you have
Yes.
like 5 minutes, or if anybody you have anything to do? Because I want you, I want to show you on the market now. On the market. All right. Okay. So let's share here. Okay, since that you have done cryptocurrency just now, okay, let's see what is the market price and what is the market price of the Bitcoin. Okay, so last time market.
BTC.
Huh? Oh, you didn't see?
No, we can.
Can you see?
Yeah,
Okay, right.
investing.com.
Yes.
Okay, see now what is the price of Bitcoin?
$37,000.
$37,000. So these two is the most active one. So this is the most active one. So this is still 1 ringgit. Okay, if you have a confidence in this Tether, so you may buy this at $1. Okay, still $1. Cardano is still $1. So this is actually the okay. This is Bitcoin Cash. So I don't know. I haven't checked that this Bitcoin Cash. But you may have a look at this one. Okay, so see lah. So this is 37. So this is still traded in US because US is still on the trading hours, right? So you can see the colors here changing. Red, okay, so red meaning that it's going down. Okay, you can see that Ethereum is now falling. Falling 2.56%. Okay, so let's look at the stocks. Stocks. So let's look at the stocks now. Okay, so we look at Malaysian. And Malaysia. Okay. Okay, so let's have a look at one here. Okay, so tenaga nasional. Let's have a look at here. Wait. So you can see there is the this is a symbol change market cap volume. Done. Okay, so this is tenaga nasional. So let's see tenaga nasional. Okay. Oh my God. I need to subscribe, but I don't subscribe. Biasalah, financial. Okay, financial summary. So this is the income statement. Okay, let's look at the, okay, this is financial statement here. So you can see have the income statement, balance sheet, cash flow. So technical, let's look at the technical analysis. We look at the technical analysis. See what is actually suggested for this. Suggested for this. Okay. Okay, so this is the technical analysis. So the suggested summary, a strong sell. Why? See the price. Oh, where is the mana dia punya? Okay, so why it is strong sell? Let's look at this chart. Dia punya chart. Let's see. See the mana chart dia? Okay, see the chart here. The chart here is actually falling. So it expected that the price will go down. So that you see the moving average there. You see the moving average here. Moving average here, right? So it is the trend is moving down. Okay, so that's why they suggested you to sell. Okay, and let's see again where you can find. Okay, so these are the historical data. I want to see. Okay, so this is the EPS. So this is the beta. So this is the beta. So if you want to find the beta for your company, so you may just look at the general information, general information of the stock, and then you see the beta here. Okay, we have learned that the beta 1 equal to return for the market, correct? Okay, so if less than 1, meaning that the price, the return will be lower than the market return. Okay, for instance, market return is 4%. So for this stock, the return for this stock will be lower than 4. Okay, but if this beta is more than 1, okay, if this beta is more than 1, so the return for this market, for the return for this stock will be higher than the market return. Okay. Okay, remember kan? We have discussed about this beta before. So if in CAPEX, when you calculated expected return, so you have to know beta. So this is the beta. This is the beta. So how you going to find the ROE? ROE, you have to look at the financial statement. So how to look at the financial statement is here lah. Financial summary, income statement, balance sheet, and whatnot. So if you want a ratio, okay, if you want the ratio, you can have this ratio. You can have this ratio. So they have all this ratio, but other than this, you have to calculate lah. So this is price earning ratio, price to cash flow. Okay, so this is the ratio that already calculated for you. Calculated for you. Okay, so that's it. I think any stock in particular you want to see? Any stock particular you want to see? Anything? Nurul? Said? Rodizan? Either your company? You okay, for example, Said Rodizan, you look for?
No, I
Can see Petronas dagangan.
Petronas dagang. Okay, let's see Petronas. So this is Petronas. Petronas gas. This one. Okay. So what is the cap, market cap volume. So last dagang, right? Petronas dagang. So this is Petronas dagang. Okay, so this is the general information first. Petronas dagang. So overview. Let's see what happened to the stock prices. Okay, so this is the effect. Okay, what is the beta? Is 1.05. 1.05. So this is you can use this you can use this for that. And financial statement, you can find this ratio.
Sure. So doctor, for our FEP, can we take this number or we need to show the calculation?
Beta.
The ratio and so on.
You can take this. You can take this ratio, but this is only a few ratio. I think this is like I don't know how many years they have this gross margin. Okay, I don't know how many years here, right? So this is this is the benchmark. When we are talking about benchmark, right? So this is the company. So this is Petronas Dagang, Petronas Dagang, and this is in the industry. So price earning ratio is higher than industry. We can see that the price earning ratio for Petronas Dagang is higher than industry. And then maybe you're gonna have look at earning per share, 0.28. This one is lower lah, okay, compared to the industry. Okay, so this is the benchmarking. Okay. Lagi tak? Management effectiveness. So this is management effectiveness. So you're talking about return on asset, return on equity, return ROE, right? We are talking about ROE, return on equity, right? So 13.81. So if you have the ROE and you know what is the dividend payout ratio, right? So you can calculate the G. And this is how you're going to find all this information from this. I use investing.com lah because I sign up for this, but I didn't actually use this for my investment. But just for the sake of finding an information. Okay. So this is one way on how we're going to find the information. Okay. So any question anymore? You want to see you want again to see the Bitcoin just now?
Actually, Doctor,
anything?
we have question on CAPSIM.
CAPSIM, okay.
Yes.
So when is your CAPSIM? All right. Okay, so let's go to CAPSIM. Okay.
So I believe we set the date on the 26th, right?
Yes, 5 to 9.
So what is your concern on CAPSIM? All right.
The duration for hours and to what extent will we do CAPSIM? Because right now we're doing it for strategic management and it definitely takes more than half an hour per round, what we are doing now.
Okay, so I expect the same thing happen to CAPSIM in financial management as well. Okay, so why you require half an hour?
No,
How
because
you
you said
require more than half an hour?
we normally we will have our discussion, we look at the results and then what we want to do. And we do some simulations to look at all the ratios and balance sheets and pro forma before we finalize.
Yeah, so that is actually the processes lah, for you to do the decision making. Okay, exactly. So okay, so in a way that you have to reserve for more than 4 hours lah. Okay, for more than 4 hours. Okay, so during the CAPSIM simulation, what you do is that you deal with Mr. Suresh. Okay, so you told Mr. Suresh that if you're ready, so you give like 20 minutes or 10 minutes duration before you start with the next round. Okay, so in a way that, okay, for each round you need like 10 minutes discussion before you go for the next round of half an hour, right? And then another 10 more minutes for discussion, then start for the next round. Okay, so in that way, right, so you need to reserve more than 4 hours now. So this 4
So
hours
basically, yeah.
Yeah.
So Doctor, the CAPSIM is going to be exactly the same as our strategy management with products, marketing, finance.
Yes.
Okay.
But what I'm going to evaluate you is that I want to evaluate you based your understanding on what you have done in your strategy. You have done your strategic planning. Okay. So when you do the strategic planning, and what you have to see or look is actually the financial performance of the company. Meaning that whatever decision you have made in your first round, you need to evaluate it in terms of your performance, your financial performance, and then start to evaluate it and improve it in the next round. I don't know how strategic management is actually looking at, but what I'm looking at is actually I'm looking at how you be able to manage your company performance in terms of monetary or financial performance. Financial performance. Okay, so in a way that you have to have a positive cash flow, right? So what matters here? What matters here is that you must have a positive cash flow, and you must be able to generate profit with all your strategies that you have implemented along with the 8 rounds or 8 years. 8 rounds is considered like 8 years. Okay?
Yeah.
So you can see that you can see the improvement there. Okay, so if you can't see the improvement there, meaning there is something wrong with your strategy. Something wrong with your strategy, because strategy, whatever strategy you implement in the company, it should give you a positive impact to your financial performance. Okay, so this is what you're going to do. Okay, so meaning that now you know for sure that you are not also taking you are not only taking 4 hours, or meaning that on the 26th of June you may require more than 4 hours to do this, like 6 hours or 7 hours. So just allocate your time.
So Doctor, is each of the group progressing independently, or we have to wait for the other groups to move into the next round every time?
Okay, so what Mr. Suresh will do is that they will do it. I think they do it concurrently, right? So meaning that if they start one round, so everybody will start the round. I mean the whole group will do the same round at the same time. So they're going to do it concurrently to all the groups. Okay.
Yeah, maybe can I ask the other
So
groups?
you have to be there to be present.
Yeah. Can I ask the other groups, Doctor, how many hours normally they need?
How many groups? What?
The other groups normally how many hours do they need for per round? Then at least we can replan our time for this. Yeah, per session. Per round, I mean.
Session.
Not session.
They normally
within
they
the session.
allocate 4 hours, but yeah. For session 17 we do it in class because they have like one whole day class. So I allocate from 2 to 3, 4, 5, 6, 7, 5 hours.
Okay.
5 hours. I think minimum is 5 hours. Okay, because the first session will be the introduction. And the introduction session, Mr. Suresh will explain about the game. Okay, introduce. So what some sort of briefing and whatnot, and Q&A. Okay, then we'll start with the first round, and then you have the discussion, and then next round. Okay, so that will be around 5 to 6 hours. 5 to 6 hours. Okay.
Okay.
Right. Okay. So thank you for being with me until. My God, you are so super great, man. We have extended our class for almost 1 hour. Thank you so much. Okay, so thank you for being with me. Okay, Mila for 2 hours of it. Okay.
Good luck, inshallah.
But
No worries.
Alhamdulillah, my husband has taken
Just take
taken the
Panadol.
vaccination yesterday. Oh, Panadol. Okay, all right. Okay, I have to take before or after?
Before and after. Before the injection about 4 hours or 6 hours, and then after injection immediately. So you avoid the
Oh,
fever
yeah.
and these
Okay.
things.
Okay.
We took
All right,
Pfizer.
inshallah.
Alhamdulillah, it was
And
fine.
drink plenty of water.
Yes.
Inshallah.
Have some sleep,
Okay.
inshallah. Yes.
Inshallah. Inshallah. Okay. We want to carry a luggage now because we want to travel. We want to